So cheap. Yesterday, Mr. Lutnick's old firm, Cantor Fitzgerald, by the way, upgraded the stock to a buy from a neutral. For more on what is next for Tesla, let's bring in Wells Fargo senior auto analyst Colin Langan. Colin, great to have you with us.
Thanks.
You've been bearish the name overall based on the fundamentals, but if you're to take a look over at your overall bearish thesis, what percentage can you attribute that now to the politics surrounding Elon Musk?
I mean, I think regarding the news today, most of my thesis is based on the fundamentals. I think some of these protests could be short-lived. So I'm underweight. I think there's plenty of downside from here, but I wouldn't be, recommending to short the stock on protests and all that stuff. I think that could all phase out in months, weeks. But before all of this happened, we talk about the stock is down, 50%. Stock's still up year over year. Fundamentals are worse. Earnings are down. Deliveries were flat last year,
right.
Probably on trend to be down this year. This is a growth company trading at 80 times consensus, over 100 times my estimate. So I think there's plenty of other issues that I have that support my underweight. This does, in the near term, add to it, but I wouldn't be underweight with just based on politics.
Good call by you, number one. Number two, they told us a couple years ago that we're going to have trough margins and they would reaccelerate. This last quarter, 16 handle was the worst we'd seen in 5 years. I'm hard-pressed to believe it can get much better from here, given the competition and given some of the demand. Where do margins go from here?
I think there's no question that they really go down, in my opinion. You have continued pricing pressure. That was the surprising part last year. You were down 1% on deliveries on an 8% price cut. So you didn't actually even get those price cuts, didn't translate, pushes pressure on margin. I think that continues. You have the affordable model coming that even if it's successful, it dilutes margins. And I think the big sort of risk at the end of the year, as much as everyone talks about Trump benefit, IRA, EV credits, $7,500. Tesla is the biggest beneficiary of those credits. Once those get pulled, that's going to put significant pressure on the margins. So I don't see many levers to actually raise margins this year.
So, Colin, the narrative around the stock has been it's not a car company. It's all these other things. How do you think about all these other things? Full self-driving, robotaxi, robots, whatever.
Yeah, I think if you look at the stock, I have I think most investors think maybe $70, $75 of auto value, and the rest is attributed to the Optimus and the Cybercab. Even in my bearish valuation, I have $200 billion of value there. And look, Waymo is doing 200 rides a week. And their last valuation was reportedly $45 billion. Like the humanoid robot, the biggest valuation I've seen is less than $50 billion. So you have to believe that they are far ahead of everyone else, even though Waymo's out there demonstrating actually better results. So, and I have structural concerns about the strategy with full self-driving with vision only. If you talk to a lot of experts, can it pick up things like glare, dust, fog safely? So we'll see how they could get around those challenges.
So, Colin, to Karen's point, this is round trip from that whole run-up that we've had since October 2024. At a certain point, all of the things that Karen said have to be worth something if nothing is worth anything anymore, being as though his personality has thrown into this bifurcation of, I love the car, I love what it did for the climate and everything else, but now I hate Trump and I hate Musk. At a certain point, do you say it's overdone? It sounds like that's where you're on the fence with here. Could it go down more? Yes, but are we at that point where there's some innate value?
I think we're not even close to the innate value, right? As I said, the stock is still up year over year, and the earnings and consensus are way down. Deliveries came in way worse. The fundamentals have come in worse. So
where's the level where you buy it?
I have a $130 price target, so I still have 40% downside from here, and I don't think that's crazy at all, considering how weak things have gotten.